I would like to thank Sibafi and also ICD for the opportunity to speak today. I've been in the space for about 10 years, first as an early Bitcoin enthusiast, and then over time, having worked as the head of digitization at CME Group, we launched the Bitcoin index products and futures products. And now you may have heard, as of last week, there was a launch of the US-based regulated ProShares ETFs, which are using the CME futures as the underlying. So there's both fast innovation happening and slow innovation happening. So what do I mean by that? Focusing at a macro level on what we're seeing in the last decade, and particularly in the last couple of years on blockchain technology, if you look at it from an enterprise perspective, so meaning big corporations and some governments, you would actually think the progress is very slow, oftentimes because people are working on projects, and these are often very deep infrastructure level either replacements or alternatives. And when you're talking about the equivalent of replacing the pipes of foundations of your systems, these take many years to do. And so for those who are impatient, it may seem very slow. However, we are talking about replacement of infrastructure using blockchain technology, which can take potentially decades to do. And I think that's where some people may think, oh, there's not a lot going on in blockchain. It's not actually true. Based on the macro level discussions we have with corporates around the world, there are some substantially quiet, but yet deliberate alternatives happening with using blockchain technology to actually help replace certain systems that are frankly legacy and decades old and need replacement. And then on the flip side, you have greenfield opportunities where we are seeing countries or institutions that did not have a lot of existing legacy infrastructure. And you are seeing actually the adoption with a clean slate or white paper to be able to just start from scratch and adopt that new technology and leapfrog. Very much akin to those who had landlines versus mobile, and to be able to leapfrog is actually an advantage. And because the barriers of entry to actually adopt blockchain technology is that much easier these days, and often it does not require the multi-billions of dollars to actually implement the infrastructure, it is actually accessible to more and more smaller companies, countries, and those who have that greenfield opportunity. I think the most challenging is if you are an existing legacy infrastructure or financial institution, and you have to find workarounds with your existing legacy infrastructure. And so I'll stop there for the moment. There is both fast and slow innovation going on if we focus on what is happening at the blockchain technology side of the world. Thank you very much for that. And Dr. Hummus's use cases were absolutely spot on about solving for real world problems. And that is the one challenge I have for all countries looking at CBDCs, which is what is the practical problem that you are solving? And is it actually better for your wholesale banking system or your citizens? And I'm going to answer your question by giving an example. Some of you may be very familiar with Project Bacon in Cambodia, which is National Bank of Cambodia Central Bank has launched a wallet in connection with a technical group called Suramitsu, where they were encouraging young people to get a digital wallet. And then their CBDC was to actually encourage banking, because most of the young demographic, which is about 60% or so of the population, are not banked. And interestingly enough, the CBDC was launched a year and a half ago or so to actually encourage banking, but in digital form, because most people have mobile phones. And so if you think about it, it's almost in reverse. They're actually launching and encouraging CBDC usage in order to get more young people banked, which is actually it's a system of not one or the other, meaning retail banks no longer are useful. It's more, how do we actually coexist and actually create a system where all parties have value? And I think that is something that is not discussed enough. There seems to be, at least in sometimes when I hear about cryptocurrencies and CBDC, it's an us versus them mentality. And really what we should be thinking about is the collaboration and where could the bridges be built to actually bring crypto and CBDC, anything digital, into the real world and solving real world problems. And so for those who are not familiar, please look into Project Bacon. It's a very interesting project and it is live. Add one more point on the topic. When we talk about financial inclusion, one thing that governments can do very well that sometimes private sector does not do as well is not only supporting and rolling out a product like a CBDC, but also the education and infrastructure that you need to support the extension of that to its citizens. And the education piece, I think sometimes gets lost when people talk about financial inclusion. People need to understand how to use the service as well as financial literacy, well as being offered the product. Take a stab at that. We have a live example in the works today. Whatever your opinion might be, but El Salvador has made Bitcoin legal tender and has indicated that one of their thermal renewable facilities will be using volcano energy to mine Bitcoin. So I think that answers the question of whether a government can do it. The question is whether it's actually prudent for governments to be doing that or not.